Good day, ladies and gentlemen. My name is Akaiso Michael, and I'm here to do my analysis on AVAX USDT. All right. So, paying attention to what has occurred in the marketplace, we'll, we'll find out that this here was the sole reason price moved, expanded to the upside. Not this, not this. It is this. It is this. All right. So, why price moved to the upside? What do we have again? We still have what? Please pay attention. Please pay attention. See, this is liquidity. This is liquidity. This is liquidity. This becomes liquidity to the market. This becomes liquidity. All right. So don't pay attention. This is not your entry point. This should be your entry level here because the market algorithms would see this as liquidity. All right. Now let's see if we have a break of market structure. Let's see if we have a break of market structure on the daily time frame to validate that this will be the next entry level. Because once you see that on your higher time frame, we are on a certain move like this to the upside, then on the daily time frame we have this kind of structure. We have this kind of structure on the daily time frame. All right, this type of kind of structure plays out on daily time frame. Okay, on the daily time frame we have this. Don't forget we are still buying, but on the daily time frame it will not just be like this. Then on the daily time frame, once you suddenly see something like this, a break to the downside, breaking the last low. Once you see a break of the last previous low, then you will know that it is time for what the monthly time frame to change direction in a retracement way or in an impulsive way, depending on the environment of trade, depending on the environment of trade, and depending on what algorithm has laid out, has created in the past. All right. So those are the two factors we need to put in place. We don't just say, "Hey, this break of market structure is to reverse the market," which is not always so. Okay, so let's see on the daily time frame. Do we have a break of market structure on the daily time frame? If we see a valid break of market structure on the daily time frame, then yes, 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 our bias is correct. To be time to what move to the downside. Do we have a break of market structure? Do we have a break of market structure? A lot of you would argue, but this is a break of market structure. A lot of traders will argue that how would this guy call this a break of market structure? Yeah, but this is a valid break of market structure to me. Now I would explain. Let's go to the 1 hour. Let's go to 1 hour and see if that is a break of market structure. I don't use 1 hour. I don't use all those stuffs. What I use is just the monthly and the daily time frame. That's all. That's all. All right. So of course you see, this is a low which was broken to the downside here. All right. So that's what I need just the 1 hour for. No more 1 hour. Let's go back to the monthly. Let's go back to the daily. Alright, so you see, validated. We have been validated. So now peacefully, our monthly time frame, we are now headed for this level. This is the level we're headed for. This is the level we're headed for. Alright. This consolidation, higher high, low, higher high. Alright. So this is liquidity. Fair value gap was created and also liquidity. Price is aiming for this level. We're headed for here. Price is headed for this level here. Then from there, what do we have? What do we have? Another move to the upside. Another move that will start the bullish run to the upside. Okay. So now, of course, if you see what is happening here, this is a potential order block. This is a potential order block. All right. It's a potential order block which you can see that it has clearly been broken here, which is a sound break of market structure on the monthly time frame without even going to the daily or what's it called, all those your smaller time frames. All right, this is a valid break of market structure to the downside. And what the market algorithm is currently doing is what? It's filling up this void here. It's filling up this. filling up all of this here. This is being filled. All right, this is being filled. Okay, I'll take this as a Judas swing. This is the Judas swing of the monthly time frame being created. This is being filled. We don't need this anymore. We don't need this. Don't need this. This is a Judas swing. All right. Then I expect this move to the downside. So let's go back to the daily. Don't forget. These are voids that the market is aiming for. See, a lot of you traders, you always think that market structure is higher high, higher low, but we are all wrong most of the time. See, the algorithm moves price to do a certain thing. Once you can spot what where the algorithm is trying to carry price to, your market structure will definitely improve. To me, I still want to see algorithm coming back down here. At least this is a fair value gap which needs to be filled, and this is also liquidity for this consolidation here. All right. So to the daily time frame, to the daily time frame, to the daily, we can see that what do we have is so clear, so clear. Void was created. Permit me to call this a void. This is void that you see algorithm drove price to do what now? To do what? To do what? Filled it up to the brim. And you see, this is also liquidity. This is liquidity. This is liquidity here. This is liquidity. See, this is definitely liquidity that price came for. Can you see? Price came for that. Alright. Oh, it was engineered. Okay, this is what now. This is equal high. This is equal high. A more reason why price still needs to go back up. A more reason why we should have price coming back up. Alright. So after this occurred, what do we have? A break of market structure to the downside here. To the downside, market structure break. This is a market structure break, not a stop hunt. This is not a stop hunt. Never a stop hunt. You see, there's a difference between stop hunt and a break of market structure. Alright. So you see, after that occurred, while price was going down to break structure, algorithm created void, which algorithm has filled up here. Filled it up to what now? To the brim. It has been filled. It has been filled here. It has been filled. It has been filled here. After it was filled, what do we have again? What do we have? The banks entered. This was the bank entry. Alright. To do what now? After the banks entered, what did they do? What did they do? They've taken out the stops here. Then after that, you see, price headed up to the upside. To the upside. To do what now? To do what now? Look for it for yourself. Look for it yourself. After it did that, what do we have again? Bank to the downside, taking stop loss. Then after that, price drove back up. Please, there's something I want to bring to your notice here. Don't always pick another block when you have another zone above the other block. Look at what I'm saying here. This is another block. By all standard, you should have been right here for your entry. But see, what did price do? What did price do? Price came for what? This. Price came for this here. See, fair value gap. See, when you have two zones, this lower and one higher, don't go for the lower one. Algorithm will see it as liquidity. Algorithm sees those kind of things as liquidity. Can you see? This becomes liquidity in the eyes of algorithm. This becomes liquidity in the eyes of algorithm here. Can you see? This becomes liquidity in the eyes of algorithm. Alright, and this was an initial order block. Quite alright. It gave you pips here. It gave you money, but at the end of the day, you see, came back, took this engineered liquidity, and this is looking like liquidity. Why? Because of this fair value gap above it. Alright. If you're seeing other block, go for the other block higher. If you're seeing other block and liquidity, go for the liquidity higher. If you're seeing other block and fair value gap, go for the fair value gap higher. Algorithm will use the lower one as liquidity. Alright, so you see, void field. Now let's see if we already have a break of market structure on that zone. All right. I always love to see break of structure when we see a reaction. Once we spot a reaction, the first thing you should always look out for is a break of market structure. It's a break of market structure. Yeah, do we have a break of market structure? Yes. And of course, if you pay attention, you see that what this was the last order block, the banks to break market structure to the upside. All right. And of course, I'm expecting maybe yeah a retracement to this zone here, to this level here, to that level here, this level. Then back to the downside. Where are we headed to? Where are we headed to? Our direction is what? To where the banks would enter next. Okay. So anything you are doing, always make sure that what you are trading in line to, you are trading in line with where the algorithm is carrying price to. Alright. Don't trade against the trend. The market has environment of trades. Alright. And you as a trader, what you should always be looking for is that what environment are we? Are we in the bullish or in the bearish environment? Right? Most of the times, the reason why a lot of traders loses money is that they are buying in a bearish environment. Okay, it is the algorithm that creates price. They give rooms for all of this. They give rooms for all your buying. In a selling environment, they give you room to buy. Then you make profit and you be profitable. Then all of a sudden you lose all your profit, all of it, all of it. Why? Because you don't know the environment algorithm is trading. Okay, so I expect this price, this pair to head down, taking out these stops while filling up all these voids. Then from here, from this level here, it's time to drive home, drive up. Then from there, we go up. All right, guys. I wish you good luck